Wonder what really moves the crypto market? You're not alone. Understanding these factors can help you stay ahead. In this video, we're breaking down 7 key factors that influence crypto prices so you can make smarter decisions and stay calm through the ups and downs. Before we jump in, don't forget to like, subscribe, and hit the notification bell so you never miss simple, helpful crypto tips. Let's get started. Factor 1. Supply and demand dynamics. Cryptocurrency prices are largely driven by supply and demand. For example, Bitcoin has a fixed supply of 21 million coins, with new coins created at a decreasing rate through halving events every 4 years. These halvings produce new supply, often leading to price increases if demand remains strong. Different cryptocurrencies have varied supply models. Some continually increase supply, while others burn tokens to reduce it, like Ethereum's fee-burning mechanism. Demand comes from new users, institutions, and real-world applications. When demand outpaces supply, prices rise. If supply exceeds demand, prices fall. Understanding these dynamics helps predict crypto price movements. Factor 2. Regulatory news and government policies. Regulatory news is one of the most powerful forces influencing cryptocurrency prices. Because the crypto market is still relatively young and often lacks consistent global regulation, any government decision, whether positive or negative, can cause immediate and significant price movements. When governments or financial regulators make positive announcements, such as establishing clear legal guidelines, approving new crypto-related financial products, or recognizing digital currencies as legitimate forms of payment, it often builds investor confidence. These developments create a sense of stability and encourage both retail and institutional investors to enter the market, typically leading to price increases. A notable example is El Salvador's decision in 2021 to adopt Bitcoin as legal tender, which sparked a wave of optimism and bullish activity across the market. On the other hand, negative regulatory moves, such as outright bans, crackdowns on mining, or ambiguous legal statements, tend to trigger panic and sell-offs. Investors fear legal consequences or reduced access to platforms and services, which leads to rapid declines in prices. A clear example of this was China's comprehensive ban on cryptocurrency activities in 2021, which caused a sharp market crash and led to mining operations relocating to other countries. Beyond direct crypto regulations, central banks also influence the market through monetary policies. Decisions about interest rates and inflation have a ripple effect on investor behavior. For instance, low interest rates make traditional savings less attractive and encourage risk-taking, often driving people toward alternative assets like crypto. Conversely, high interest rates can pull money back into more stable investments like bonds or savings accounts, decreasing demand for volatile assets like cryptocurrencies. Factor 3. Institutional adoption and corporate treasury allocations. Institutional adoption boosts cryptocurrency's legitimacy and price. When major companies like Tesla or MicroStrategy buy Bitcoin for their reserves, it sparks buying and signals crypto as a viable asset. Banks such as JP Morgan and Goldman Sachs offering crypto services bring new capital and credibility, often increasing trading volume and stabilizing markets. Investment products like Bitcoin ETFs make crypto accessible to traditional investors, driving demand and price growth through regulated channels. Factor 4. Technology upgrades and network development. Technical developments within blockchain networks significantly impact their associated cryptocurrency prices. Major protocol upgrades that improve scalability, security, or functionality often drive price appreciation as they enhance the network's value proposition and future potential. Ethereum's transition from proof of work to proof of stake through the merge represented one of the most significant technical upgrades in crypto history. This upgrade addressed energy consumption concerns and introduced deflationary tokenomics that reduced ETH supply growth, contributing to price appreciation leading up to and following the implementation. Smart contract platforms are particularly sensitive to technological progress. When platforms announce successful upgrades that improve transaction speeds, reduce costs, or add new functionality, their tokens often experience immediate price increases. Factor 5. Market sentiment and social media influence. Market sentiment drives crypto prices more dramatically than in traditional markets due to the retail-heavy investor base and 24/7 trading environment. Fear, uncertainty, and doubt, FUD, can trigger massive sell-offs within hours, while fear of missing out, FOMO, creates buying frenzies that push prices to unsustainable levels. Social media platforms serve as real-time sentiment indicators and price catalysts. Twitter, Reddit, and specialized crypto communities create echo chambers where sentiment spreads rapidly among traders. Influential figures can move markets with single posts, as demonstrated by Elon Musk's historical impact on Dogecoin and Bitcoin prices through Twitter activity. News cycles significantly impact market sentiment and subsequent price movements. Positive news about adoption, partnerships, or technological breakthroughs can spark rallies, while negative headlines about security breaches, regulatory crackdowns, or technical failures trigger sell-off. The speed of information dissemination in digital markets means sentiment can shift rapidly, causing equally rapid price changes. Factor 6. Exchange listings and market liquidity. Exchange listings represent significant catalysts for cryptocurrency price movements, particularly for smaller altcoins. When major exchanges like Binance, Coinbase, or Kraken announce new token listings, it typically causes immediate price increases due to increased accessibility and anticipated trading volume growth. The Coinbase effect specifically refers to price surges that occur when Coinbase announces new asset listings. Since Coinbase serves many retail investors and has strict listing requirements, inclusion signals legitimacy and often triggers substantial buying pressure. This effect has become somewhat less pronounced as the market has matured, but remains a significant factor for many cryptocurrencies. Market liquidity affects price volatility and movement patterns. Cryptocurrencies with low liquidity experience larger price swings from relatively small trades, while highly liquid markets absorb larger transactions with minimal price impact. During periods of market stress, liquidity often decreases as market makers withdraw, amplifying volatility in both directions. Factor 7. Macroeconomic factors and global events. Macroeconomic conditions increasingly influence cryptocurrency prices as digital assets become more integrated with traditional financial systems. Inflation rates, interest rate policies, and currency debasement affect crypto demand as investors seek alternative stores of value or adjust risk preferences based on economic conditions. Global economic uncertainty often benefits cryptocurrencies, particularly Bitcoin, as investors seek assets independent of traditional financial systems. Events like banking crisis, currency devaluations, or geopolitical tensions can drive crypto demand as people look for alternatives to traditional monetary systems. However, severe economic downturns can also negatively impact crypto as investors flee all risky assets. Central bank policies significantly affect crypto markets through their impact on liquidity and risk appetite. Quantitative easing programs that increase money supply often benefit cryptocurrencies as investors seek inflation hedges. Conversely, tight monetary policies that increase interest rates can reduce crypto demand as traditional investments become more attractive. And that's a wrap on the 7 biggest crypto market movers. Knowing these can help you navigate the market with more confidence and less stress. If this helped you, give it a thumbs up and share your thoughts or questions in the comments. And be sure to subscribe and hit the bell for more easy crypto insights. See you in the next one.